Okay, what is up, traders? What's up, tycoons? Super excited for today's video. Doing an update on ARR. This is ARMOUR Residential REIT. This one is a pretty popular dividend stock. Now, I did a video here recently on it, but we are doing a viewer request as we have an update, and we really followed the technical analysis very, very beautifully. We're going to go over all of the technical indicators to be aware of, what we're looking at currently, as well as go over the major levels that we need to pay attention to. All right, so make sure to smash the like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. So in the previous video, I highlighted how we had this ascending triangle pattern, and we were going to see if we could have got a breakout. We had some bullish price targets here of $7 and $7.50 that we would have hit if we got a a breakout of this ascending triangle. But I also went over these three levels right here. These are the 61.8, the 50%, and the 38.2% retracement levels. These are the three most common and well-respected retracement levels. Now, why do we use those? Nothing moves in a straight line down or a straight line up. You get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. So if you're respecting those retracement levels, you have the possibility of continuing the trend. Now, you can spot reversals when you come down, retrace, consolidate a little, let's say, and then break through those retracement levels. That's how you can spot an upside reversal. All right. So what we see here is we took our swing high, connected it down to our swing low. Obviously, we had a strong move to the downside, and everything up to our 61%, 61.8% retracement level, which was 662, was a valid, healthy retracement and a strong resistance level that we needed to break out of, okay, to get that potential reversal and hit our bullish price targets of $7 and $7.50. And look at what happened, guys. We could not close above $6.62. As you can see, we wicked up above there, but the candle ended up closing in our supply zone below. Now, this was our supply zone right in here. As you can see, there's an area where we come down and we consolidate, and it's a period of 10 candles or less, which is what you look for when establishing supply and demand zones. All right. I have a whole tutorial on that, on how to do supply and demand zones, how to do Fibonacci's, as well as all of the indicators that we have over here. So if you ever have a question or you want an in-depth tutorial of how to use these indicators, all you've got to do is type in Exactly Trades, and whatever it is that you're looking for will pop right up. So, for right now, we could be potentially starting a big move to the downside. But just as you have retracement levels of resistance that we were respecting, we also have retracement levels of support. So, we had this large rally to the upside, okay, our healthy retracement from that big downtrend. If we hold above these three levels right here, which are going to be 5.8, 553, and 526, we still have the possibility of continuing up higher and breaking out of the longer downtrend. Okay, so we have a shorter uptrend. All right, we're pulling back, and we held above 553 today. Now 526 is really going to be that line in the sand. If we come down and break 526, flip that to resistance, and most likely we're going to get a reversal, okay, and start heading back down to retest some of our previous lows around $5, $4.50, and $4.38. So pay close attention to those levels. All right. Now, when it comes to some of the technical indicators that we had, all right, we had recently, we just got a momentum crossover. So this is the momentum SMA indicator. And so momentum is going to be this blue line right here. And you have the red line as your momentum simple moving average. And we had a bearish divergence. So notice how we made a high here, and we were making higher highs over here. Clearly, we were in an uptrend, right? And rather, we're making a high and lower highs over here. So we had a slight bearish divergence on the momentum indicator. And most recently, we just got a bearish crossover. So if we zoom in, all right, we can see that we just crossed below here right at this point in our supply zone. So if you start combining multiple strategies together, all right, so first strategy, one is we're at a very strong resistance level, our 61.8% retracement level. Second strategy, we're in our supply zone. So we have two things, really telling us that there's a chance sellers could try to dominate here and push price back lower. Third thing, all right, let's take a look at our our MACD. What do we get? We end up getting a bearish MACD crossover where we see this line cross below, similar to this one, right? And so this is known as a MACD entry signal. Okay, we were also overbought on our relative strength index. This red line here is 70. That's the technical definition of overbought. So you can see once we broke out from our pattern, we were overbought. We ended up pulling back, getting a momentum crossover, and then as well as a MACD crossover. And if you take a look at our DMI here, the way that this is set up is the red line is sellers, the green line is buyers, and the blue line is the average. And we can see the sellers are fighting to take control right now, have crossed above buyers and above the average. So it's going to be interesting to see, do sellers lose control again? And do we find support at our major support retracement levels that I gave you guys? Or do we potentially see sellers continue to take more control and potentially break through our major retracement levels? Now, one thing that I want to highlight is that this pattern right here, we had a look above and fail. Okay, so a look above and fail is typically pretty bearish, right? So rather than buyers coming in and really showing that they have control and, extending this breakout, rather they failed, okay, and sellers took control. And notice how we broke that trend line there, okay? So, we broke that trend line that we've been holding a few times. Every time, we've come down to that level and bounced, we ended up breaking that level after the look above and fail. So things do look bearish at the moment and are leaning more towards the bearish side, but that doesn't mean that it's all over for the bulls. Above 526, we still have the potential to continue heading back upwards. That's going to be a key make or break level that we really want to stay above, as well as 553. So, that's pretty much it for today's update. Our major resistance levels are still going to stay the same. They're still going to be 619 and 662. If we can break above there, we've got bullish price targets of $7 and $7.50. Now, remember, none of this video is financial advice. Rather, I'm just breaking down data presented to you guys on the chart. Remember, these candlesticks are just representations of live auction markets, okay? And buyers and sellers are fighting and bidding on these things all the time. And we can interpret these candlesticks and use some technical indicators to possibly give us an understanding in the price action and really just help to understand why things are moving the way they are. So hopefully you enjoyed this video. If you did, smash that like button, subscribe to the channel, and I'm out.